Welcome guys to another full volume trading course video. In this video guys, we're just going to do another weekly market outlook on a couple of setups that I'm looking at, and in addition we're going to be reviewing the signals that I sent last week, USD Yen, GBP US dollar, and USD CAD, and going over the reasons why I decided to signal them and why 2 out of the 3 trades went through successfully and the USD CAD did not go through. So what we're going to do guys is we're going to go through the dollar index, Euro USD, UJ, AU, GU, UCAD, and maybe GJ or EJ. But mainly what I'm hunting this week are these 4 or 5 pairs, give or take. So this is what I'm looking at. So let's get right into it, guys. And as we approach the trades that we took the signals on, we'll review the reasons why we decided to take those trades as well. So let's get right into it. Dollar index. We can see that structure is in a major descent right now, or descending trend. Therefore, the general or overall momentum right now is to the downside. In addition, if you take a look at what had happened last week, we can see that structure failed to complete the inverted head and shoulders pattern. Some would argue that it is forming the right shoulder as of right now of this inverted head and shoulders pattern, but we did see that price did fail to break out of this rejection zone that I have drawn here, more importantly, which coincides with the monthly resistance, daily resistance, and weekly resistance. So a pretty big fire zone, as I like to call it, or rejection zone. So with that, structure did break out of this ascending trend and now is forming what we like to call a bearish flag, right, or a flag pattern. With that being said, where I personally believe dollar is headed for this current week, because I do expect further downside. However, it all depends on what structure gives us, as well as what the data is for this given week and how the market responds to that given data. So if we take a look at the dollar index right now, we can see on the daily that we are bottoming out right here at the 92.90 handle. If we take a closer look at the 4-hour time frame, we can see, as stated before, a nice bear flag that is forming. The bear flag will look something like this, and we're looking to use this impulsive movement and get further continuation of it to the downside. With that being said, on the dollar index right now, the only thing that's going to warrant further continuation to the downsides is if and only if we do crack these lows. If price continues to trickle to the upside, therefore, we should simply let that be. We're not looking for buys, right? We're only looking for sells. We can't take entries on this. Why can't we take entries? Because the overall momentum, guys, is to the downside. We're not trying to piss against the wind, right? We're counter trend traders. We're not counter trend traders. Apologies. We are not counter trend traders. We are trading with trend. We are trading with momentum, right? So because of that, the only way that's going to warrant continuation to the downside is if and only if we do crack these lows here, and then we should see further pushes to the downside. If not, it'll be interesting to see if price can crack these tops here, and if it does, it'll probably make a nice impulse right around the monthly resistance area once again. Now, if that does happen, a potential double top pattern could form, and then from there we could expect a big impulse down. If a double top pattern does form, once again, I'll still be looking for the same structure. I'll just be looking for a bigger correction to the downside, most likely near the 38.2 handle. Now, if these tops do get cracked, guys, I'm going to simply go back to the daily chart and assess if momentum has switched from a bearish stance to a bullish stance. And if that does occur, then the only way that I'd be looking for longs on the dollar index as well as dollar index pairs is if and only if we can see clear cracks above the monthly resistance, probably more importantly around the 0.5 fib level. If we can get cracks above the 0.5, that's definitely going to warrant continuation to the upside. So if dollar can break the lows at the 92.90 handle, further continuation should be seen right near the previous another daily support, which is at 91.77. If that fails to occur, let this trickle to the upside. Let's see if it can break these tops near here. Let's see if it can potentially create a double top pattern and the big impulse down, or if it does crack above these highs, look for the entry near the 0.5 and look to take it back to the overall trend. That's what's going to happen on dollar index. And if it simply just consolidates between this level and this level, let it do this. Remember, guys, we're not interested in this. We're interested in those free-flowing trades in the end of the day, right? So if it consolidates, let it consolidate. Euro. Interesting structure. We can see that the overall momentum is ascending, in which the current momentum is in a descent for the short term. However, a couple of days ago, last week in last week's trading, we did see that Euro USD did break out of its descending trend. It happened about 3 days ago, and with that being said, further continuation to the upside is now to be seen. This trend that I have here is drawn on the smaller time frames, just simply putting a dotted line here to know that this is where the daily downtrend did break out of. So because of that, we could expect a potential last kiss on that daily downtrend before the big impulse to the upside. Like I said before, guys, I have been stating that the Euro US dollar is due for a big correction to the upside. I've been calling the retracement of this movement down to the 115 handle a couple months ago. And now I'm calling for the big movement back to the upside on the euro. If we take a look at the smaller time frame, apologies guys, going back into the daily real quick. We also can see a head and shoulders formation occurring right here, right now, on the euro to US dollar. With that being said, if we do crack the lows of the daily support around the 116.64 handle, which coincides with the monthly and 0 fib level, we're going to see a nice impulsive drop to the downside. Most likely it's going to create a higher low on the overall uptrend, and then we'd be looking for a really big buy back to the upside. However, I generally don't think these lows are going to crack, and because of that, I'm expecting a big impulse. But we trade what we see, not what we think. If these lows do crack, you best believe that Albert over here is going to be looking for the big sells. Taking a look at the 4-hour time frame, we can see that the euro is currently breaking out of its structure. How do we know that? Well, the first indication was the break of that daily downtrend, indicating to us that now we are going to potentially receive some bullish momentum. In addition, we can see a potential bull flag that is forming right now, a little bit of a more impulsive bull flag and not as much as a cleaner pattern, simply because there's no real definitive base being created right now. In addition, we can see that the euro is on a slow descent to the downside. Last night it did break my bottom trend of trend support, or of the descending trend, and with that, now that trend is acting as trend resistance for the short term. Last night I did give a call on my setup stating that we could expect an impulse down to the daily downtrend break before a big push back to the upside, a potential last kiss that could occur near that previous trend resistance and the 23.6 fib level. With that being said, this is how the euro is going to play out, guys, from what I see. Euro will do as I expect and simply go down to that overall previous downtrend, which is now acting as trend support, and then make a big impulse to the upside. If that happens, take the break of that smaller downtrend, take a short-term buy position, and once you get to this rejection zone here, you either move stops into break even or close your position. Then once we get to this general area, again, it's going to be interesting to see if we do have enough momentum to break above the 0.5 fib level / my area of rejection, or as I like to call my rejection zone. Now, if that structure doesn't play out, where we do get a leg to the downside, we play the break of this downtrend, get a nice solid entry near the 23.6, and start taking the trade back to the upside and moving stops into break even near the rejection zone, then it'll be interesting to see if structure will continue to trickle down to the previous area of rejection that it once was in. What could happen is structure could forward down, create a double bottom, and then from there make the big impulse to the upside. We'd be looking for the break of this downtrend, looking for entries near one of these general levels, and then start adjusting our position as the trade continues. Now, I'm not interested in the sell opportunity here, guys. I'm only interested in the buying opportunity right now. So if this continues to trickle, I'm going to let it continue to trickle. I'm not going to chase that. If there are opportunities to take a break out of any of this downward correction, no problem. I'll be looking for entries once that breakout does occur. Now, if I find no buying opportunities whatsoever, therefore the only way I'm going to take a sell, as stated before, is if we do get cracks below the monthly support. And even then, you got to look left here because you do have this previous 4-hour support sitting there to the left. So until we start seeing clean enough structures breaking below, these lows and things of that nature, I don't necessarily know if euro has enough momentum to push to the downside. It's interesting what happened last week, guys, with euro, simply for the fact that this falling wedge right here was the same pattern as this one right here. Goes into the rejection zone near the monthly support, creates a falling wedge, impulse. Goes into the rejection zone near the monthly support, creates a falling wedge, impulse. Past predicts future, guys. So on the euro, I'm going to be looking for price to eventually show opportunities to take this short-term buy to the upside. If it does start to bounce near this daily support handle, the 118 flat handle, I'm not taking entries near here. This is too close to the rejection zone. It's not worth my time. It's not worth my emotional stress. If it does this, I'm going to let it consolidate within this area. I'll be looking for entries above the 0.5. If it continues downside, I'll be looking for the break of that downtrend. Run it back to the upside. If no buying opportunities occur either from here or a break of this downtrend, then and only then I'll be looking for sells due to the break of the low of the monthly support. Most likely the 4-hour support, to be honest, but I mean, it depends where structure breaks out because there is enough pips, about 76 pips from the daily, or even the monthly is probably about 50 and change. Yeah, about 54 to the next 4-hour support. So the only way I'll be looking for buys if we break the downtrend, look for entries near a lower part will be create a bigger impulse to the upside. If that doesn't happen and it holds the space, looking for entries above the 0.5. If that doesn't happen, looking for entries below the daily support. Move to break even once we get to the monthly and see if we can ride down to the 4-hour support. If not, guys, simply let it consolidate. Plan your trades, guys. Have scenarios for everything that is going to occur within the markets. USD/JPY finally has created a definitive direction for us. Last week there really wasn't any, but this was a great trade and this was a signal. This is the first signal that we're going to go over, guys, that we sent last week. This is a basic candlestick play that I teach in the course. You guys should go back to the candlestick section if you guys aren't familiar with it. Basically what structure does is it makes a big impulsive movement to the upside and quickly starts to decelerate near a longer term level. In this case, it was the 23.6 and daily resistance level. But if you actually look left, you can see right where it decelerated, price created a rejection zone out of that. You can see in the past, every single time we get to that general handle, price starts to quickly die off in reference to momentum. With that being said, what structure did do is kind of create like this little, some could call it an inverted cup and handle, and we could be expecting one more impulse down. If you notice what structure did do though, it didn't start to really sell off to the downside until we did start breaking these daily support levels. One big impulse, now we're looking for the second one here, another big impulse. In addition, on the 4-hour time frame, you can see it a lot better, but we can see a head and shoulders that is forming right now with the neckline being on the bottom here. Taking it to the 4-hour time frame now, we can see, like I said before, that structure has created now a definitive downtrend. Momentum is definitely to the downside. We can see lower highs that are being created every single time. Price does make a big impulse to the upside. In addition, guys, like I said, there's the head, the left shoulder, and the right shoulder forming. Neckline being at the 4-hour support. With this being said, I'm only looking for buys, guys. Buys and only buys. Sorry, not buys, sells. Sells and only sells, guys. It's the only type of trades I'm looking to take. In UJ, you can see that every single time it makes a leg down, it makes a nice bear flag and then corrects. Bear flag corrects. Bear flag corrects. It's a beautiful pattern, guys. That's why it's very important to look at structure and start coming down to a few amount of pairs that you look at so you can understand the way they behave, the way they act, the type of patterns they create, and things of that nature. How I'm taking entries on UJ. Either this 4-hour support gets cracked, I'm looking for entries near there, right near the neckline. And then from there, if we can get even a crack below the 78.6, I'd probably be looking for entries. And then from there, I'd be taking it to the 111 handle. This is more of a dicier play because of what's underneath us. However, there still is opportunity. Now, if price doesn't present any opportunities to enter near here and just impulsively moves down, I'll let it be. I am not interested in that, guys. I'm interested for a potential entry near this area here. This wouldn't necessarily be a high probable trade for me. This would be probably a medium problem trade or a low probable trade simply for the fact that we do have another 4-hour support, the 88 fib level, and then in addition the weekly support right underneath. So, taking entries near here, structure is simply going to go like this. It's just going to trickle down until we get to that base. Now, if structure can hold this base and maybe make one more impulse up, maybe make another break of trend, I'd be looking for entries within the descending trend and look to take my trade down to the 111 handle. Now, if that doesn't happen, I would be favorable for price to kind of break out of this downtrend like this, Still create a lower high because it taps out right here at the same high, so right here near the 61.8. And then we would be taking that trade and running it back to the downside. This would be a really favorable trade for me, simply for the fact that this would create a bigger impulse to the upside, which will result in a bigger impulse to the downside. It's like a gun, guys, right? It's loading up for the big push down. Now, if those sell setup opportunities don't occur, the only way that I'd be looking for buys is if we do crack the highs of this 4-hour resistance here, which is right above the 61.8 fib level. Then and only then I'd be looking for buys near there and looking to run back to the previous high. Now, if we do get clear definitive breaks below the weekly resistance, if structure does something like this and then creates the bear flag and then maybe creates another one, I'd be looking for another entry below that and taking it down to the monthly support, the 1382 handle. If I do take trades near this general area, I am going to reduce my lot size simply for the fact that there is a lot of fire underneath. You got the neckline, you got the weekly support, so you can expect a bit of choppiness like this till we get there. Don't know if you guys are interested in something like this compared to some of these movements, straight up, straight down. But that's how UJ is going to play out. Only if we break the highs of these, we can expect a big move to the upside. If not, we need to break the lows of these plus a bear flag completion, and we'll start getting taps near the weekly support. Right now, structure is breaking out of its descending, of its ascending trend. However, we haven't broken the 4-hour support, and because of that, that could warrant a false breakout of this flag pattern right there. On a 1-hour structure, we could get an entry on this as well. I mean, we would still need this 1-hour support to crack. I mean, this 4-hour support to crack. I mean, you still could grab entries near this previous 4-hour support if it does break and try to run it down to here. There's just so much fire going on, so much choppiness. But guys, once we do get down to the 111 handle, and if we start to show real rejection, so price eventually makes a move here and then starts to pop off and starts to decelerate, I'd be looking for the big impulse back to the upside. Now, only and only if price can show on the daily that we're clearly cracking below the weekly support, this would create a beautiful trade down to the monthly. But to be honest, guys, I do expect one more movement to the downside into the weekly support, then I do expect a big up move. Only if we can crack the highs of the 4-hour resistance, which will warrant a big movement to the upside. AUD USD broke out of its daily descending trend last week. In addition, price is now creating a very impulsive movement to the upside. We did just recently retest the monthly support, and just like I said about the euro, I am expecting a big movement on the AUD USD as well, simply for the fact that we did break above a 3-year monthly resistance just like the euro, and we are holding structure quite nicely. We're showing a lot of rejections to return back to that area. Last week, we can see that price did slip to the downside near my rejection zone area. And with that being said, we can see that price did exactly what it did in the past, enters that area, rejects, and pushes to the upside. With this daily descending trend break right here, we should be looking for buy movements to the upside, potentially to this descending trend that I have drawn on the 4-hour time frame. Sorry about this, guys. Don't know why my chart's going all crazy. Okay, there we go. We fixed it. So looking at the AUD USD right now, we can see that structure did break out of its daily descending trend. And in addition, it is creating higher lows, 1, 2, 3, and a potential 4th one. In addition, with the recent data that came out last week, price did make clear cracks above the previous weekly resistance, but then quickly failed to continue hold above it, and because of that caused a big movement to the downside. However, we are creating a bull flag right now. The bull flag would be formed with the impulsive, the profit taking, no real definitive base being created yet, but we're looking for the impulse back to the upside. With that being said, we can also see a head and shoulders pattern that could potentially form an inverted one if structure fails to create that bull flag and comes back down to here. We'll be playing the neckline break and running it up to the overall downtrend. How I see AUD USD playing out. Couple of different ways, guys. It's interesting. Either price is going to hold this minor uptrend, create a higher low off of it, break off of this downtrend, complete the bull flag, and then make a big bullish movement to the upside. If something like that occurs, I'd be looking for entries near the 0.5 fib level. Crack the highs of that. Now, if structure fails to continue moving to the downside, to move to the upside and still continues to move to the downside, I would like to see this minor uptrend get broken and for price to make a test of this overall trend here. If it does do that, I'd be more favorable to take a trade to this if this trend does hold and price shows signs of rejection of that trend, because then that'd create a bigger movement to the upside. Bigger impulse down, bigger impulse up. I would be looking for entries then generally near here rather than looking for entries near here if this minor uptrend held. Now, the minute that we start getting into this 61.8 handle / my rejection zone area, we have to start moving our stops into break even. So whether you get entries near here or you get an entry near here, depending on how big of a pullback it makes, minute you get to this area here, either close your position or simply move your stops. Because at some point, price is either going to impulsively go up, create the lower high, and then it'll be interesting to see if it can break that downtrend and continue to the upside, or if that's going to make a big impulse back to the downside. Or price could simply, regardless of whether you get an entry here, you get an entry here, price could continue to trickle and then eventually just consolidate near here and then eventually come to maybe that point within structure and create a lower high there. I can only tell you guys for the short term what AUD USD is going to do right now, simply because I can't tell you for a longer term effect what it's going to do. Structure has to prove to me what it's going to do. For the short term though, I know that we're looking for entries above the 0.5 fib level, or we're looking for a deeper correction to the downside, looking for a break of that downtrend and running it back to the upside. Now, if none of those two options occur and this continues to the downside, we let it be. We are one people biases, right? We don't care about the direction. So because of that, if this starts to break to the downside, let it be, reassess on the daily. If this uptrend did break on the daily, then start looking for a potential bear flag to form and look to take that to the downside. Look for patterns, guys. Look for scenarios to play out. If this does break on the daily, then and only then I'll be looking for entries near the 38.2, maybe a bear flag pattern, be looking for entries below the lows of the impulse that it made, and I'd be looking to run to the 23.6, stops, move to break even there, and see if maybe I can get one more move to the 4-hour support. Do I think we can come back to the 0 fib level? Not as of right now, but if we do crack this uptrend, then sure, there is a potential chance to crack these lows once again. But for the buy signal, if we don't get a break of this minor uptrend, looking for entries above the 0.5. If not, look for the bigger impulse down and look for that downtrend to break and look to play it back to the upside. If none of those two options occur, let's see what structure does do. And if it simply consolidates, let it consolidate, guys. It's not worth the trade. Two more, guys. GBP US dollar. And then from there, guys, that was this is the second signal we sent, and the third signal we sent was USD CAD, and we'll go over the reasons why after. The signal's just going through the setups right now. GBP US dollar, we can see that structure is creating somewhat of a similar structure, just like the US dollar to Japanese yen. You can see impulsive up, impulsive down. We're expecting another impulsive up. You go to UJ over here and you can kind of see the same thing. Impulsive up, impulsive down, looking for another impulsive up. Structure recently did break out of its impulsive descending trend, and with that, price is now potentially creating a bear flag formation. However, we're not looking for sells right now, guys. We're only looking for buys because momentum's most recent shift is to the upwards direction, not to the downwards. With that being said, we'll take a look at the 4-hour time frame, and we're looking definitely for further continuations to the upside right now. A couple of ways that GBP USD can play out. First and foremost, we can see this inverted head and shoulders that did complete, followed by the neckline break, and then from there we're still looking for further continuation to the upside. In addition, we can see that price did break out of its daily downtrend and is definitely forming a definitive uptrend with the higher lows that are being created now. We can see for the short term right now that price is in a smaller term downtrend. Remember, we're looking for buys. We're not looking to take this small term trade, guys. This would be counter trend. The only way that I'd be taking for buys on this is in two different ways. If price makes a deeper pullback, I'll look for a break of that downtrend and look for entries near the 38.2, and I'd be looking to take this up to the monthly resistance. If that fails to occur and price simply holds the 38.2 and continues to move to the upside, I'll be looking for entries above the 0.5 fib level, possibly even above my rejection zone. can see the rejection that does occur over there. With that, price is most likely going to complete this bear flag, whether it makes a deeper correction and makes the bigger impulse, or price is simply going to break out at some point and it's going to make an impulse from that general area. Now, if the buy signals don't occur and this continues to trickle to the downside, we're going to see if this uptrend can break. If it does break, then and only then we can start looking for entries near that previous 4-hour support, and from there looking for trades to the downside. As of right now, if you take a look at the smaller time frame on the 1 hour, you can see that structure did just break this 1 hour uptrend, and notice this is interesting. Gotta love text. This is support, it breaks. Notice how it acts as resistance now. Very cool. You can see that structure is creating lower highs every single time. Potential one more bear flag there. It's probably going to create an impulse to the downside, and then we're going to look for the big movement up. I'm more favorable, guys, if structure does create a bigger correction to the downside. It'll create a nice movement to the upside. So only those two ways we're taking the buys, guys. Either the buys above the 0.5, or this makes a deeper pullback, and we look for entries near the 38 too. This is the better trade for me. More movement. I got more room to breathe, and I can start adjusting my position in a nicer manner. If this uptrend starts to break and this still continues downwards, wait for the daily close, see if momentum has shifted, and then and only then you can start looking for sells to the downside. USD CAD, the last one that we did take a signal on last week. I'm going to go over this current structure, and then from there we'll go through the signals. We can see that CAD is definitely attempting to form an uptrend direction. However, it is having time gaining traction to the upside. We did just recently break that major impulsive descending downtrend, and now structure is creating its current uptrend. If we can see right now, CAD is potentially creating an inverted head and shoulders pattern. What would warrant the inverted head and shoulders pattern would be the break of this neckline right here. Could probably play the break of the trend neckline there. I don't know if that works. That might work. I have to draw a trend on that. But still, there is a potential inverted head and shoulders forming. If we take a look at the smaller time frames on the CAD right now, we can see that the CAD is breaking down its upward momentum, and this is what I want to demonstrate for you guys. You can see with the first dotted line I have here, the structure was ascending and broke out near here and then created a last kiss before making a movement to the downside. That was the first shift right here, number one. Number two is the second dotted line I have running with my mouse here. Right here is where we broke the second shift within momentum. The third shift was the break of the trend neckline of the head and shoulders pattern. You can slowly see how momentum is starting to die off. We had a head and shoulders pattern that did complete, followed by a neckline break and a trend neckline break. However, the neckline didn't necessarily hold as well as the trend neckline, and now even the trend neckline is not holding as well. With that, I was last night expecting further continuations to the downside, but with Canadian dollar's most recent impulsive movement to the upside, I'd be kind of fearful for continued sells. The only way I'd still be looking for sells is if we only break that current uptrend. Then I'd be looking for the big impulse back to the downside. But even if we do break that uptrend, guys, I'm probably going to want to see confirmed closes below the 23.6 before taking any type of trades. I mean, you could take a trade near here and attempt to run it near here. If you guys do take an entry above the 23.6, move stops into break even here and see if you guys can get a leg to the downside. As stated before, guys, I was expecting continued downward momentum because price was rejecting this previous trend support of that head and shoulders pattern, now acting as trend resistance. However, 8 hours ago, about 6 hours ago, we just broke out of it. Now, in addition, I was expecting a sell because of the lower highs that was be creating, but however, we just created a higher high. One high, two high, three highs. One low, two low, three lows. Can't expect further continuation. With that being said, CAD's direction now changes for me. This could potentially present the potential entry opportunities. I'd have to take a look at the 1 hour real quick and see. Now, this is actually not presenting entries, even if that 4 hour closes like this, guys. Even if we do get a solid retest, let me tell you why. You take it back to the 1 hour and you can see that consolidation has been created. With that being said, I'll be looking for entries above the break of this 1 hour resistance and running it to the upside. Now, if price forms somewhat of a more downtrend, this would be a better move because this would create an impulsive movement to the upside. I'd be looking for entries near the break of that downtrend and running it to the upside, stops at break even the minute we get to the 4-hour resistance. Now, if we can get validated entries near that previous 4-hour resistance, then and only then I'd be looking probably to take it back to the highs of the daily resistance, which is right near the head and shoulders, the head of the head and shoulders. Like I said before, the only thing that's going to really validate for me for continued sells is if we do break the 23.6. But right now, momentum is definitely showing further continuation to the upside. So guys, as stated before, I want to look for entries above that previous 1-hour resistance, get an entry near there, stops the break even here, and see if we can tag these highs here. In addition, we did just break the smaller term inverted head and shoulders right here, so that could warrant further continuation to the upside. Plus, we could expect a bull hammer for further continuation to the upside. So that's what I think is going to happen with CAD. Now, to finish off the video, guys, I just want to go through the 3 signals I sent last week. USD JPY, we sent this last week, and this went through and almost hit our take profit by 5 pips and missed it by 5 pips. But the one thing, guys, you got to understand at the end of the day is that signals are just simply directions provided by a provider or by someone in which they're just giving you a mere direction, and the parameters they give you is general suggestions. You have to understand that the market doesn't necessarily need to go to those levels that you set. It doesn't have to. It doesn't have to hit your stop loss and doesn't have to hit your take profit. Market will do whatever market wants to do. You have to remember that this game's extremely automated. So, a lot of the big players knows where your take profits are and they know where your stop losses are. So they're going to try to make sure that you don't get those hit, and they're going to try to focus more on your stop losses getting hit so they can get paid. So because of that, guys, when price approaches potential profitable areas, don't assume it has to go to a given price. If it's in that general area, it's okay to close the trade. Too many times I see people focus on hitting certain levels. They want to get that exact pick number, and whatever it is, secure the bag, take the money. So GU and UJ were trades that GU hit take profit 1, UJ 5 pips from take profit 1, and UCAD got stopped out, unfortunately. I'll show you why we took UJ and where we did enter in the trade. My entry was at 112.38, so just so you guys can see where my entry was sitting right here at 112.38 where the red line was. You can see on the smaller time frames right here that we were getting rejections of this overall downtrend, creating lower highs that were occurring. In addition, I did see that structure was starting to continue its descending trend by recently breaking these lows here, and we're continuously making lower lows, as I stated before, on the smaller time frame. With that being said, the reason why I decided to pull the trade was as such. We did just recently break below the 38.2. However, price was not showing definitive breaks below the 0.5. Price did rally back to the upside, but did show nice rejections of the 38.2 and was unable to crack above. With that being said, we were seeing continuous lower highs being created and rejections of this descending trend. With that, as I started to see more supports get cracked, I didn't necessarily take the most optimal entry simply for the fact that structure was moving quite impulsively and it wasn't presenting a lot of opportunities for entry, so this was more of a gut feeling type of play. But I did take the entry because I was very confident on how structure would play out. My stops were sitting right above the 38.2 handle, so wasn't really risking as much. In addition, I didn't really put that much of a lot size on, so because of that, I was comfortable that my entry was not prime and it was not optimal. However, it was suitable for the fact that I did decrease my lot size, and in addition, I had a tight stop loss. Entries occurred near the 38.2, the 38 handle, the 112.38 handle, and it did create a nice decline for us. Once we started to show definitive cracks below the 0.5 and we started to show confirmed rejections of it, we just saw the nice slip, and now we're creating a bear flag for further impulse. Really great trade on this one. GBP USD, this was a basic breakout play right here. We decided to take the entry on the previous break of this 4-hour resistance, which did occur right here. We could see the break plus the confirmed break by rejecting the previous level it broke out of. We pulled entries near here and did get the nice rally to the upside. Market momentum was ascending. We did get the break, which was an indication of a continuation of momentum. We did get the confirmed break with rejecting to break below that previous level that we just broke above. With that, we pulled entries, and then from there we did see a nice movement to the upside. Take profit 1 was achieved. However, guys, because of the PMI news that came out, I think it caused a slip up and caused people to get stop hunted out. However, you guys all know that we either close at take profit 1 or you guys move stops to break even. It's after take profit 1, so no one really should have been affected. This did stop hunt people out, and my stop was literally sitting right at the daily support, but no harm was occurred to me, and hopefully not to the other traders. And then price did continue. My take profit 3 was sitting right above here, and it hit it last night. Or yeah, this was another great trade. Like I said, we had this previous resistance here. Momentum switched from descending to ascending with that daily downtrend break. We got the indication with the break above the previous resistance. We got the confirmation with the retest. Everything was lining up. Momentum's to the upside, break of a daily downtrend, continued momentum with the break, which is the indication, the retest, which is the confirmation that we got a nice movement to the upside. You could have either closed your position at take profit 1 or move stops to break even, and then from there, let the play out. This was unfortunate, but that's part of the game, and that's why we have to dance with the markets. Now, the last pair that we signaled, guys, was USD CAD. We signaled the pair right after this second candle closed here, and I called the trade right there. Unfortunately, I was a little bit too impatient on this because we were looking for the breaks of this head and shoulders pattern that did form, and in addition, this trend neckline that did form right here as well. We were looking for the break of all of those. In addition, we were looking for the break of the neckline of the head and shoulders pattern, which coincides with the monthly support in 23.6. Unfortunately, price made a push to the downside and was great at first. Looked like further continuation to the downside. We are continuously making lower highs, and we are looking for further impulses to the downside. We got this first break that occurred right here. Now, the one thing I was extremely impatient for was that I didn't wait for the retest of the 23.6. With that, that caused more risk that was exposed to us. So because of that, what I should have waited for was to see clear rejections of this previous level we just broke and then take the entry and look to take it to the downside. If price did that, we would have gotten the impulse move to the downside. However, notice price just broke straight back above the 23.6, which warrants a potential bear flag formation, which it did at the current time. If that occurred, I would have never called the trade, and we would have been looking for this uptrend to break and be looking for the trades to take to the downside. That's why this was a false signal. It broke, but I never got the retest of the previous level. It broke, so there was no confirmed breakout. Because it broke right back above the 23.6, that warrants a bear flag formation, and we'd be looking for the continuation back to the downside. However, price just recently broke above the 4-hour resistance and this previous trend resistance that was trend support, which is now trend support again. So because of that, momentum is now actually looking to crack the potential highs of CAD. So this is why that was a false break. I needed to wait for the 23.6 to be rejected once more, and then I could have pulled the entry and we would have gotten the impulse to the downside. Like I said, because that didn't happen, that warrants a bear flag formation, and we were looking for that uptrend to break to take further continuation to the downside. So overall, though, UJ went through, GU went through, UCAD didn't go through. Like I said, guys, it's a numbers game in the end of the day. 2 out of 3 trades that are going through last week, not the best in reference to probability, but if you guys manage risk properly and you guys had good risk-reward ratios, then you guys would have made money last week. Patience will truly pay out in the long run, guys. So this is how I see a lot of these pairs going through in the next coming days, and it'll be interesting to see how they play out. And in addition, this is the 3 reasons why I took those 3 trades, UJ, UCAD, and GU. UJ was simply due to the fact they were creating lower highs, momentum switch from ascending to descending, further continuation to the downside was being seen with the breaks of trends and levels. We decided to pull the entry, and then from there we did get the nice slip into Friday. Closed the trade right at the 111.70 handle. So it was a solid 50-60 pip trade, nothing crazy. GU was just a mere trend shift, momentum shift. We were descending on the daily, then we broke out and warranted ascending. We did also break out of the 4-hour resistance. With the rejection of that previous breakout, this became new 4-hour support. We took entries near there. We were also creating higher lows, and then price did start to move to our take profit 1 handle. Unfortunately, data did come out which did stop hunt us, but after we hit take profit 1, we moved stops to break even, so really no loss should have occurred on that if you guys didn't close at take profit 1. And then USD CAD, this was a false signal simply because when price did break the trend neckline and more importantly the 23.6, we never waited for the rejection or the retest of that previous level. It broke, and with that it broke right back above, creating a bear flag formation. Because of that, I should have been more patient on waiting for the 23.6 break and look for that formation to play for the bigger impulse to the downside. These are the reasons why I took the trades, guys. Still, overall, a phenomenal week in my perspective. This is how, like I said before, I expect the market to play out. It'll be interesting to see, though, because data can always change the things that I just said, but this is just simply speculating. Remember, in the end of the day, we trade what we see, not what we think. So, I hope you all enjoyed this week's weekly outlook and also a review on the reason why we took the signals last week. And I look forward to seeing you all in the next video, guys. Have a phenomenal week.